Today's episode is sponsored by Trading 212, the platform bringing commission-free investing to everyone. Welcome to Many Happy Returns, where we aim to make you a better investor. I'm Roman.
And I'm Michael.
The US Supreme Court struck down Trump's tariffs in a landmark 6-3 ruling, and Trump responded by immediately imposing new ones under a different law. A year into the trade war, the game of whack-a-mole continues.
We look at what the ruling actually means and whether any of this changes the outlook for investors. And in today's dumb question of the week, what is the spaghetti bowl effect? All right, let's get into it. So at the end of last week, the day everyone had been waiting for finally arrived, and the Supreme Court said Donald Trump had gone too far and he wasn't allowed to impose all those tariffs. So to be specific, they said his justification under the International Emergency Economic Powers Act was a load of nonsense, and he didn't have this authority. Congress had not said he could put taxes on willy-nilly. He could not just wake up one morning in a tweet and say, China, I'm doubling your tariffs. Now, Trump didn't react positively to this. He was pretty furious. But more surprisingly, markets didn't react that positively. There was a tiny bounce in the stock market, less than 1%. Nothing notable. Why isn't everyone rejoicing, Roman?
I think markets, quite correctly, think that essentially this hasn't changed anything fundamentally. Trump is still completely keen on the idea of tariffs. He's simply gone too far down that road to be able to turn back now. For fiscal reasons, it's absolutely critical he has that income from tariffs. And if it dries up or it has to be repaid, that's going to blow a hole in his finances. Not that he was that bothered about a deficit anyway. But in terms of equity markets, there really wasn't that much of a ruction at all, because I think a lot of this had been priced in. People already expected that he'd just shift from this set of legal justifications to another to impose these tariffs. So really it's a question of how this is going to evolve rather than a fundamental shift in policy from the president.
Yeah, I mean, he immediately called a press conference and announced 10% global tariffs, which then the next day he increased to 15%. So I don't know how long this strategy had been planned for, but it seemed like it was coming on the fly. But the key thing about those tariffs, which he's put in place now, which is under something called Section 122, is that they're capped at 15% and they're time limited. So they expire after 150 days unless Congress authorizes them to continue.
But there's a whole smorgasbord of different sections and acts in the past which allow him to move the tariffs under a new umbrella. So really it's a question of which countries are affected, which is very important, of course, and the UK in particular is very important for us, and how high those tariffs will be per country compared to the previous regime.
And to be clear, the Supreme Court didn't actually strike down all the tariffs. So some of them had been imposed under what's called Section 232, and these were specific tariffs on different classes of goods. So there's tariffs on steel from anywhere in the world, and aluminium, and cars. Those stay in place because they've been put through a proper legal process where there was an investigation, and the White House kind of earned the right to justify the tariffs, whereas the ones under the Emergency Act were just kind of pulled out of nowhere. And the key to the ruling, really, is that the power to tax, and remember, tariffs are a tax, that power lies with Congress. And unless they explicitly say to the president, we're delegating this power to you, the executive branch, i.e. President Trump, is not allowed to announce arbitrary taxes. These are taxes on Americans, remember.
And there was a recent study published, and this was done by the New York Fed, which showed that about 90% of the 2025 tariff burden was falling on US firms and consumers. Because what's possible, and which many in the Trump administration have said is going to happen or is already happening, it's possible that companies exporting to the US would have cut their prices to adjust for the tariffs. And that way it wouldn't have been passed on to US consumers. But the overwhelming evidence is that that's not the case. And that's not just from this study, it's also from several others. And economic advisor Kevin Hassett said that this was highly partisan and that the economists should be disciplined. He later backpedaled on that, but clearly it shows that US consumers and companies are paying for these tariffs. So why is it that the exporters didn't just eat the costs? Well, according to one of the studies, it's because firstly, alternative markets exist. You don't have to export to the US. And the price cuts that they'd have to impose couldn't upset the steepest tariffs. It would just make the company's products loss making. And also, many people think it'll be temporary because Trump won't be in power forever. And of course, global supply chains are often sticky. It's not easy to substitute one thing for another. So there are lots of reasons why these foreign companies, external to the US, didn't cut their prices. But the evidence is that these tariffs were being paid by Americans, either companies or people.
And perhaps the surprising thing is America's trade deficit didn't really move. So despite the most aggressive tariff regime since the Great Depression, they still had a over $900 billion deficit last year.
All that's going to happen is the deficit is going to move between different countries. So instead of it being China, it'll be moved to other countries. And that's precisely what we saw in the data.
Maybe the other thing to note is that one of the justifications for the tariffs from the White House was that they wanted to defend US manufacturing and boost US manufacturing, whereas that doesn't really seem to have happened. Employment in the manufacturing sector has declined every month since April 2025, and more than 100,000 factory jobs were lost last year. So it doesn't seem to be the case that instigating this trade war and this new round of protectionism has boosted that sector of the US economy.
I think what might be seen as a positive from all of this recent development is that the system of checks and balances in the US, because we've got the three branches of government, we've got the legislative branch, which is Congress, we've got the executive branch, which is the president, and we've got the judicial branch, which is the Supreme Court. And there is a tension between the three. And so far, there's been no pushback on Trump's powers whatsoever. So that is a worry. So this shows that that tension is still in place and that the Supreme Court, SCOTUS, can push back on the president, POTUS.
I thought it was a bit worrying that three of the justices dissented from this opinion because I'm not a lawyer, but on the face of it, nothing in that act says the president can unilaterally impose tariffs. In fact, I'll quote a bit from the majority opinion. So Chief Justice Roberts said that there's two words in that act which the White House said were important: the word regulate and the word importation. And they were basically saying that regulating imports includes the power to impose tariffs. But then the Chief Justice said, based on two words separated by 16 others, the president asserts the independent power to impose tariffs on imports from any country, of any product, for any amount of time. Those words cannot bear such weight.
And I'm reading a book at the moment about China, and actually it's talking about China as an engineering state, whereas the US is a lawyerly state run by lawyers on behalf of lawyers.
Yeah.
And this ruling just illustrates that, I think.
There was a nice line in the ruling from the Chief Justice Roberts where he quoted a different ruling from 1952. The line was, "Emergency powers tend to kindle emergencies." That seems to be the lesson, I think, from a lot of this Trump policy made on the fly. You can't claim everything's an emergency. It tends to make things worse.
So we said about the positive of it, but I think the negative might be that other countries do grow a spine around this, particularly the ones where they didn't have such a bad deal beforehand, and now they do because of the global tariffs. Particularly Europe, if that suddenly steps back and says, wait a minute, we're going to fight back, whereas previously they pretty much took it, that's going to be a much bigger cost to the US. So if that escalates now because of this, and all of the deals which were agreed on the back of the threats of tariffs suddenly start to unwind, well, I think that creates further instability. So I think that's the big negative that could come from this, certainly for the US.
The reaction from the Trump administration seems to be that they want to put all the tariffs back in place as quickly as possible through other means. Like we said, they imposed Section 122 tariffs, but they come with a 150-day limit. Though I'm not clear on when that limit expires, if the Trump administration could just take a 15-minute pause and then kickstart another 150 days of tariffs. How does that work? But they're also instigating a lot more of these Section 301 investigations into, and I quote, most of our major trading partners, according to Jameson Greer, who's the US trade representative. But these things take time, and there's an investigation that needs to play out. I think we know what the outcome of the investigation is. Oh, those countries are screwing us, we need tariffs. But it's going to take a while.
But I think it's good that there's going to have to be evidence provided, presumably, in the investigation. They can't just make it a matter of opinion.
Oh, no?
So whether that evidence is fabricated or not will be pretty clear. And that will be probably shot down in future by future presidents.
So there's going to be a whole messy process that has to unfold from here. And interestingly, one of the justices that dissented from the majority opinion was Brett Kavanaugh. And if you read his dissenting opinion, the theme that runs through it is him basically saying, this whole thing is going to be a mess if we say these tariffs are illegal. Now, I'm not sure that's how the law works, but he's got a point. It is going to be a mess, particularly around the refund process. But Kavanaugh also said, and I quote, that the decision might not substantially constrain a president's ability to order tariffs going forward. Numerous other federal statutes authorize the president to impose tariffs and might justify most, if not all, of the tariffs at issue in this case, albeit perhaps with a few additional procedural steps. In essence, the court today concludes that the president checked the wrong statutory box. I love that as a summary of it. And in fact, Trump quoted that line in his press conference twice, I think.
I think it is going to be a mess. And I think many US companies are going to try to legally get some of their money back. But it's going to be a protracted process. And for small companies, even more difficult if they can even get any money back.
All right, let's come on to that mess everyone's facing after the break.
Today's episode is sponsored by Trading 212, the platform bringing commission-free investing to everyone. Trading 212 Stocks and Shares ISA is the cheapest way to invest, with zero commission and one of the lowest FX fees I could find on the market. Looking to keep things simple, you can easily automate your investing with pies that allow you to rebalance your portfolio at the click of a button. Customers with Invest accounts can also benefit from the Trading 212 card, which has no FX fees, true interbank rates, and offers 1.5% cashback on all transactions up to £15 per month. Many Happy Returns listeners can claim free fractional shares worth up to £100. Just create and verify a Trading 212 Invest or Stocks ISA account, make a minimum deposit of £1, and use the promo code RAMIN, RAMIN, within 10 days of signing up, or use the link in the show notes. When investing, your capital is at risk and you may get back less than invested. Past performance doesn't guarantee future results. Pies and Autoinvest is an execution-only service, not investment advice or portfolio management. Automatic investing refers to executing scheduled deposits. You are responsible for all investment and rebalancing decisions. Free shares can be fractional. 212 cards are issued by Paynetics, which provide all payment services. Trading 212 provides customer support and user interface. Terms and fees apply.
Okay, so there's a curious thing that comes out of this ruling, which is that all those tariffs and all that revenue that's been collected by the US government, they were not actually allowed to do that. So presumably, we're going to have lots of companies in America who've been importing goods and paying tariffs, applying for refunds. Now, the White House has said it's not going to proactively refund companies, but we're just going to get another legal process that drags on, I imagine. And I can see that more than 2,000 importers have already filed cases at the Court of International Trade asking for their money back. So Kavanaugh talked about a mess. This is the mess, right?
Yeah, I see an estimate of 134 billion that was collected in total for the IEPA measures so far. So it's not a small amount of money. So let's just think about what's going to happen now in terms of flow of money. Companies were charged a tariff, a tax essentially, which they may be able to claim back. But some of those costs were passed on to consumers. Now, are the consumers going to be compensated? No. So,
really, it's just that simple. No chance. Sorry, you bought an iPad. You're not getting that money back.
So in effect, it's good for the companies if they do get the money back. And that might be seen as some kind of economic stimulus for those companies inadvertently.
Oh, surely it has to be. If you pass back 134 billion, was it you said, into the economy, that's not a small amount of money. Does that go straight to the bottom line? Does it get paid out to shareholders? Does it get invested? I don't know. I don't think anyone knows. And I'm not convinced it's actually going to happen, or at least not quickly. I guess it has the potential to be the biggest class action suit we've ever seen.
Now, one of the things which Trump was talking about was the huge revenue which was generated by these tariffs. And in terms of the total income of the US government, it was fairly trivial, but not zero.
And expected to grow over time.
Yes, exactly. And obviously, if you've got less income coming in and your expenditure hasn't fallen, there's going to be a bigger hole in the finances. And the budget deficit last time I looked at it was 6% of GDP. So this is not going to improve things.
Yeah, when they passed the One Big Beautiful Bill Act last year, that had some tax cutting measures in it, which were offset by the tariff revenue in part. So tariffs were projected to raise more than $1 trillion over the next decade, which now might not be there. And I've seen some estimates that we could see something like a $600 billion hole in the fiscal projections. Now, for their part in the White House, Treasury Secretary Scott Bessent says he expects the tariff revenue for this year to still be the same as it was going to be anyway, just via different means. But I think the uncertainty of that has gone way up. Do you think the bond market is going to care?
I think so. Now, bear in mind that the revenue in 2025 was about 5 trillion, 5.2 trillion in the US. So this is a fairly sizable, it's a material proportion of that total revenue. So if you're thinking about lending money to the US government, you're thinking, will they be able to afford these payments for the coupons and redemptions? Now, of course, the answer is yes, but less so than they were previously. So will that increase yields? I think it might. And I think the fact that the US government doesn't really seem to care about the deficit is what's worried many investors in US treasuries. What was seen as a completely unassailable market is no longer seen as quite so unassailable.
In the short term, it might just mean lots more issuance than had been priced in.
I think that's right. I think that's almost inevitable. And the question is whether people will want to absorb that new debt and what price it's going to have to pay the government in order to raise the capital.
I guess a lot of it comes down to how quickly can the Trump administration rebuild its tariff program by other means, and how sustainable will that prove, as well as all the knock-on consequences of tariffs for the economy. Like we've seen the latest GDP print out of the US undershot all expectations.
And in a sense, this news about the ruling has occluded that bad news about the US economy, which Trump didn't really talk about, which is not surprising.
Yeah, GDP growth came in at 1.4% on an annualized rate in the fourth quarter. Now, that was way below expectations. So the consensus forecast was, I think, 3%. And like you say, that news really got buried. Maybe this tariff ruling could kind of get the administration out of a hole if it does provide a sort of backdoor fiscal stimulus.
Now, there is a well-known effect from the shutdown on GDP. There was a 43-day federal government shutdown in October and November, and the Bureau of Economic Analysis, that knocked about a percentage point off growth. So maybe that accounts for the very weak print.
So it may be a short-term dip.
Yeah.
And then they always project these shutdowns have a negative impact in the short term, and then there's a kind of catch-up growth period. So maybe we'll see a big GDP print in the next quarter or two.
Yeah, so I wouldn't read too much into that blip on GDP. A single print is never worthwhile focusing too much attention on. But I think in terms of international investors who buy US treasuries, remember a lot of treasuries are bought by international investors, they must be thinking, is this still a good deal? Given what's happening to the US dollar, which is weakened, given what's happening to the debt to GDP ratio, which is increasing, could there be better opportunities elsewhere?
I think we still see the so-called sell America trade bubbling on in the background as an undercurrent for lots of markets, really. The US equity market was one of the worst performing major markets last year. I know in absolute terms it still delivered double-digit growth, but it was way outpaced by a lot of markets in Europe and Asia.
And we've seen big inflows into European markets as a result of that. People do tend to chase return. So I think this Sell America trade is real. I saw a nice quote, which was, instead of Buy America, B-U-Y, we've seen B-Y-E America, as in goodbye.
Hard to make spelling jokes work on an audio podcast, but you've done it. Well done. But do you think this Supreme Court ruling reinforces the Sell America trade, or doesn't change anything? Or does it abate it a bit?
For me, I think it improves things because it does show that US government is now working again. We did get the pushback and the check of Trump's powers. And that is a reminder that this thing is temporary. Eventually, we're going to get a change of administration, hopefully to something which is more business friendly and economically literate.
Yeah, but to me, it's a minor check on power, really. The average effective tariff rate from the US leading into this ruling was around 17%, which is the highest since the Great Depression. After the ruling, and with Trump, doing these across-the-board tariffs by other means, the effective tariff rate on average is still 9%, which is the highest since the Second World War. So we're still in a different regime. It's just not quite as bad as it was before. And it might go back to how it was before if they find other legal avenues which they can defend.
But I think people will get tired of this, just as they did in the first Trump presidency, where it got to the point where every time he opened his mouth, equity markets sold off. And I think people were just quietly hoping he'd not say anything. And he did tail off in terms of his pronouncements and the impact on markets towards the end of his previous presidency. Now, that's a very different dynamic to the first year of his presidency, when he was unbelievably consequential in terms of the rules that he passed and the changes he made. I think the appetite for that, certainly amongst the US electorate, is diminishing pretty rapidly.
I just think there has to be an uncertainty premium hanging over the US. Like, now we're on a 150-day tariff clock. So that's going to expire, I guess, in late July. Who knows what comes after that? Trump's meeting President Xi in Beijing in April. Who knows what the US-China trade relationship looks like after that? We've got these Section 301 trade investigations going across, what did they say, all our major allies and most parts of the economy. How can businesses invest and plan in a situation like that?
Oh, yeah, I think for companies which export to the US or companies in the US which import from elsewhere, yeah, very, very difficult. What is amazing to me is how resilient the US equity market has been to all of this. Now, we have seen a big rotation, not because of these tariffs, but because of AI. So I'd question what's going to happen next in terms of, will that earnings growth hold up? Will it broaden to other sectors beyond IT, which is what many analysts are expecting? Or is this going to start to show in terms of a weighing down of the S&P 500 and the NASDAQ? Because that, I think, will really focus people's attention, particularly US voters whose pension plans depend on that.
I've seen a lot of people saying that, we're heading into a stock picker's market where there's these massive undercurrents under the surface of the stock market, where there's companies going down like 30% in a day because of a press release from Anthropic. This is crazy. You've got to be able to outperform here. But to me, it's like saying the exact opposite. Who knows what's going to happen? There's so much uncertainty about the impact of AI. There's so much uncertainty about what the White House is going to do tomorrow, what trade policy is going to be. To me, this is the perfect landscape for an index investor. Forget about all that detail. Who's going to be able to predict that stuff? Just hope that the index, the broad economy, whatever rotation's going on, will come out of it okay in the end.
Well, I'm not going to argue with that, certainly. So I think we should pity the next Fed Reserve chair, because it's not going to be an easy choice. They have this real huge dichotomy now of potentially weakening growth as a result of these tariffs, alongside inflation, which quite demonstrably remains sticky. And certainly these tariffs won't help when it comes to high inflation. So cutting interest rates into such an environment would, I think, be frowned upon by international investors as something which would be inappropriate.
Oh, I think they'll do it anyway, and we'll see what happens.
I think you're right. Now, sticking to your plan through many of these market ructions and economic periods of instability is usually what's best. So if you want to have accountability in your investment process, why not join our community where you can learn to do that? Just go to pensioncraft.com/membership to learn more.
Okay, today's dumb question of the week. What is the spaghetti bowl effect?
Now, this was coined by an economist, Jagdish Bhagwati, in the 1990s. And what it describes is a huge problem in global trade. Now, as countries sign ever more complex bilateral and regional free trade agreements, each of them has got its own set of rules, tariff schedules, regulatory provisions. It becomes so complex, so tangled, that ultimately it starts to undermine the efficiency gains that it was supposed to introduce.
Yeah, I can see that. If you're an exporter and you're sat there and there's 50 different free trade agreements you could potentially use around the world. Some are bilateral deals between one country and another. Some are regional deals. And they each have different rules of origin, say, that when you're exporting a product, a certain amount of the inputs into that product must come from that region. It can be really tricky to work out which of these deals you qualify for. And obviously that makes it expensive to comply. But also, sometimes people stop bothering trying to comply. And there's been a lot of interesting research that shows that even when they have these trade deals, the percentage of eligible trade that actually claims preferential tariffs is often surprisingly low. Sometimes below 50% of the eligible trade actually invokes the agreement because of the spaghetti bowl.
Isn't that strange? Do you think that's because people just find it too complex? Or is it because they just can't be asked to fill in the forms?
I think it's because under WTO rules, a lot of tariffs were reduced anyway to quite low levels. And so these preferential trade deals, they went the last mile and squashed it to zero often. But the cost of complying with them can sometimes be bigger than the savings. You might as well just go, just pay the little tariff. I can't be bothered to read through 8,000 pages of trade agreements.
So do you think AI is going to transform that? Can you get Claude to look over the contract and work out which one's best for you?
I suppose. But then there's all these non-tariff barriers which people worry about, which Claude probably can't get around so easily. Things like licenses and sanitary checks and all this stuff.
But it is getting to the point where one human can't hold all of this legislation in their mind. They can't unravel the spaghetti bowl, or the noodle bowl, as they call it in Asia.
Is that right? Is that what they call the spaghetti bowl effect? I know that this is a widely accepted effect by economists. It's not controversial. And you should perhaps keep it in the back of your mind when you hear politicians going around saying, we've signed 80 free trade agreements around the world. Well, yeah, but that doesn't mean we're going to get huge benefits from them. It would be better if the world came together under the World Trade Organization and said, here's the rules for everyone. Let's get trading. But unfortunately, the WTO is kind of dead, really, isn't it? It's frozen.
Yeah, the world seems to be moving in the opposite direction. So it looks like we're going to have more spaghetti.
And here in Britain, we will cut it up with our knife and fork, offend all the Italians, sprinkle like parmesan that isn't parmesan all over it, and hope the world still trades with us. Thank you for joining us for many happy returns. Keep sending us your questions, no matter how dumb, at mhr@pensioncraft.com.
And do remember to check out pensioncraft.com for all the information about our membership, courses, and investment coaching options.
Many Happy Returns is a Pensioncraft production, co-hosted and executive produced by Romin Nakiza and Michael Pugh. This podcast is for informational and entertainment purposes and is not financial advice. We do not provide recommendations or endorse any decision to buy, sell, or hold any security. We cannot be held responsible for any actions listeners may take, and investors are encouraged to seek independent financial advice.